Good day guys, in this video I'm going to be sharing with you 5 things that made me a profitable trader. Now, being a profitable trader doesn't necessarily mean you must be making a lot of money from the market. I was scrolling through YouTube one day when I met a trader video, and he said that it's not about the results that you're making, it's about the consistency of the results. So if you are trading, let's say for example, you are trading a $100 account and then somebody else is trading a $1,000 account. Both of you might be in the same trade with the same direction, catch the same amount of pips, but the difference in the amount you guys will make is in the lot size, not in the analysis. So when it comes to being a profitable trader, you need to focus on the consistency of the results that you are making, not the volume of the money that you are making. So just like I said in the beginning, I'm going to be telling you guys the 5 things I changed that I started seeing that consistency in my trading. The first one, of course, is going to be a good strategy. You need to have something that separates you in the market. You need to have an edge in the market. You need to have something which is a strategy that at least when you see setup, you know that this setup has a better chance of winning. We all know trading is a game of probability, but then there are some setup and there are levels that you will get to in your analysis and in your trading that you know that there are setups that have a higher chance of winning than losing. So you need to develop a good strategy. And I also made a video on the strategy I use in taking all my trades. I've been trading for a year and a half now, and I've tested a lot of strategy. I've tested the trend line strategy, different strategy, but then one thing about trading is that at first you need to learn a lot of things, but the deeper you go, you have to filter out some stuff, and then you just pick the few things that work for you. So I've been able to pick those few things that is working for me in the forex market, and I've made a video on that. So if you have not watched that video, you can go and watch it. It's a very simple, but it's an effective strategy. The second one is going to be a candlestick confirmation. I remember last year when I used to trade, I did not normally wait for candlestick confirmation. As soon as the market reached my point of interest, which is my area of interest, maybe support or resistance, fair value gap, my area of interest, I will just enter into the market. But then from August, when I started waiting for a candlestick confirmation, especially the bullish engulfing or the bearish engulfing candlestick confirmation, I've seen the shift and the change in my trading career. Waiting for a candlestick confirmation gives you a higher chance of winning a trade. I've seen the difference, I've observed it, and it has been working well for me. So you need to look for a candlestick confirmation. If you are, for example, if you are taking your trade in the 15 minutes time frame or the 5 minutes time frame, let's use the 15 minutes time frame for example, then the market has gets to your area of interest, you need to wait for a candlestick confirmation, and especially you need to make sure that that candlestick closes in the time frame that you are in. If you are in a 15 minutes time frame, which means you take your entry from 15 minutes time frame. Let's say you are waiting for a bullish engulfing candlestick to go for a buy. Wait for the bullish engulfing candlestick to close in the 15 minutes time frame before you take the trade. The third thing I did that made me a profitable trader is long-term thinking. Most of you might see an opportunity in the market today, but the markets did not meet your trading plan, which means the market did not meet your criteria, and the market is already going in your predicted direction. So some of you, some of the time it still happened to me. You want to jump into that trade because you don't want to miss out on that opportunity, and then you enter into the trade, and then the market reverses and hits your stop loss before going in your predicted direction. So with that, you need to understand that whatever opportunity you missed in the market today, you will still have another opportunity next week. You will still have another opportunity next month. The market is always a place of opportunity. The market always presents opportunity. So you just have to wait. If the market does not meet your criteria, at least 90%, Just wait. Forget about the market that day. The next day, come back again. You might see another opportunity. If you don't see opportunity the next day, come back next week. You see another opportunity. So always know that there will always be opportunity in the market. You don't have to overlook your trading rule and just going into any trade. Then at the end of the day, you just lose all the money that you must have gathered from different trades that you have taken. So you need to understand that opportunity will always be in the market. So in as much as possible that you are learning with a demo account, try your very best to fund a live account and trade live account, because you might have a good strategy on a demo account, but when it comes to live accounts, there are different things that are involved, and those things happens with your psychology. So the only way you can deal with your psychology is if you have your money on the line. That's the only way you can deal with psychology. So always remember that the market is a place of opportunity. If the market does not meet your trading rule, don't take the trade. It's as simple as that. Sometimes the market might not meet your trading rule, and then you just take the trade. That trade might go in your favor, and then let's say the trade go in your favor. Now, to you have won that trade, but then what that thing will do to you in the psychological aspect is that each time the market does not meet your criteria, you will definitely take the trade, thinking that because the last one worked, this one is going to work. Now, in the long term, you are going to keep blowing accounts because you are not trading according to your plan. So you will definitely keep blowing accounts. In the long term, that will not favor you. So remember, always know that there will always be opportunity in the market. Trade your plan and trade. That will move us to the fourth thing I did that made me a profitable trader. The fourth one is the market does not know you. The market does what it does best. So the market does not know if you are buying or if you're selling. The market does not know where you are buying or where you are selling. The market does not know your feelings. The market does not know your strategy. The price move on its own. The market has no intention to hurt you. The market has no intention to make you happy. So with that, you need to relax. I think one thing I've changed in my trading journey is that I've learned to relax. Even if, let's say, I'm in a trade, I just take the trade, have my stop loss, my take profit, then I will just forget. Sometimes the trade might go in your direction a little bit, and then come back to hit your stop loss. That's why if you are risking $100, split into two positions, risk 50 for the first position, 50 for the second position. When the one of 50 gets to 1:2, let's say, because me I target 1:3. So when the one of 50 gets to 1:2, which is one position gets to $100, I'll close that position, and then I will take the stop loss of the other position to its entry, which means if the market come back to my entry, I'm no longer losing anything in the market. So you need to understand that the market does not know you. The market does what it knows how to do best. So that's why having a trading plan is very, very important. You need to say to yourself that if the market gets to this particular place and show me this type of candlestick confirmation, I will enter the trade, and that's it. So understand that the market does not know you. So I think this is a funny story where I think these last 2 months I was trading gold, and then my brother just walked in the room, and then he said to me that some forex traders are making a lot of money from the markets, and how much have I even made from the market. So that's it just said it to motivate me though. That made me to lose my emotion, and then a news was about to break out, and then I just went all in. I stacked in my position, and that day the market hit my stop loss. I blew my account. I blew the account that I've taken from $25 to $80. I blew the account that day because I was trying to prove to my brother that forex trading, that you can make a lot of money from forex trading, and I can make a lot of money from forex trading. But of course, the market does not know you. The market took that money that day and the market went on its own. So always remember that the market does not know you. Keep your emotions in check, keep your analysis in check, keep your trading rules in check. The last thing that made me a profitable trader is risk management. Now, when it comes to risk management, there are a lot of things that you need to understand. If, for example, let's say you are risking $50 on a trade, you are in on that, then you take a trade. If the market is going in your direction, until the market at least give you that your $50 that you are risking back, there's no point of closing the trade. Which means you are risking $50, the market is going in your direction, and you are in profit of, let's say, $20. Then you are afraid that the market will come back and take your stop loss. It's better you leave it for the market to come back and take your stop loss than for you to close the trade. Because the reason why you should leave it is this: if, let's say, you are risking $50 per trade, and then as soon as the market gives you $25, you close the trade. You take another trade, as soon as the market gives you $25, you close the trade. Only one trade that you will take, and that trade will hit your stop loss. It will cancel out the work that you have put in, it will cancel out the profit that you have made for 3 days, just with only one stop loss. So if you are risking $50 on a trade, it's better you wait for at least for the market to give you that $50 back before you close the trade. Because you need to understand that the way you manage risk, the way you make money from forex trading is by paying dues. And what I mean by paying dues is this: you pay for the stop loss, the amount that remain is the money you make. Which means, for example, you make $200 in profit and you normally risk $100. Now, if you take another trade and then that trade hits your stop loss, now you have paid the dues of $100, then you have keep $100 as your own profit. So that is it for managing risk. That is it for managing risk. The conclusion to the whole thing is going to be: make sure that you have a trading plan. Make sure that you have a trading plan. Make sure you follow that trading plan. Make sure you apply good, proper risk management. And also, from time to time, try to reflect on yourself and see the area that you are lacking and the area that you need to improve on. That will be the thing that will develop you over time. Forex trading is a game of self-reflection. You need to sit down once in a while and analyze your own self, that okay, how am I going about this thing? How serious am I about this, my forex trading? So you need to be serious with the stuff you do, and you need to sit back once in a while and analyze yourself. That will be the thing that will build you over time, step by step, brick by brick. So make sure that you are analyzing your own self, paying attention to the area that you are lacking and the area that you need to improve on. So with that, I'm going to call this video to an end, and make sure you are paying the price and analyzing your charts and working day after day to be better at what you do. See you guys in my next video.